FMCG markets continued to grow during the quarter. However, we did see some moderation in the growth levels across FMCG categories. This was particularly pronounced in modern trade channel as well as in some of the discretionary categories. Further, in the soaps and detergents market, the component of price in growth has started fading. In terms of input costs, the environment was fairly benign, whereas the competitive intensity continued to remain at high levels. In this challenging market environment, we have delivered a good set of results with competitive broad-based growth along with improvement in operating margins. Our soaps and detergents business, or in fact I should start with our overall domestic consumer business, grew by about 13% with underlying volume growth of about 6%. Within this, our soaps and detergents business grew by 13% with strong double-digit volume growth across a set of brands like Lux, Lifebuoy, Dove, Surf, Rin, and some others. In our personal products business, we grew by 12% with growth being led by accelerated top line in both hair care and oral care categories. Our beverages business continued to perform strongly. The strong growth that we've been seeing in our tea business continued into this quarter as well. And at the same time, the momentum in coffee continued to remain positive. Packaged foods growth was driven by Kisan ketchup as well as Knorr soups. In our water business, Pureit continued to strengthen its market position, albeit in a slowing consumer durables market. The drivers of growth continued to be innovation and a strong focus on in-market execution. Among the innovations that we brought to market during March quarter, we had innovations in hair care, the Dove hair therapy range. We had some innovations in our deodorants business, both in Axe as well as in Lux. In skin care, we had a set of innovations in Lakme and Pond's. Dove body wash also came to the market this quarter. And in ice creams, we introduced a couple of new offerings at the onset of the summer season. Alongside these innovations and market execution, we also stepped up the advertising and promotional spend behind our brands. The incremental spend in this quarter was just under 150 crores or 90 basis points as a percentage of turnover. Coming to the bottom line, operating margins improved by 60 basis points. This is after absorbing the incremental advertising and promotion spend of 90 basis points I referred to just now. Financial income was up by about 30 crores, and as a consequence, profit after tax before exceptional items was up by about 18%, while net profit was up 15%. So overall, I think we would say that it's been a quarter of strong performance, competitive and broad-based, while also delivering healthy margin improvement. Now coming to the financial year, which also ended in March 2013, our domestic consumer business grew strongly by about 16% with a strong 7% underlying volume growth. This growth was broad-based with all our four segments growing in double digits. Operating margin for the financial year ending March 2013 improved by 80 basis points. This is after a 70 basis point step up in our advertising and promotional spend. Profit after tax before exceptional items improved by 21%, while net profit, after taking into account the benefit from our large property disposals, were up more than 40%. We continue to strengthen our leadership positions in our core categories while also investing in building portfolio and capabilities for the future. So overall, I think the financial year reconfirms that our strategy is on track and is delivering. Earlier today, the Board of Directors have proposed a final dividend of rupees 6 per share. This, together with the interim dividend of rupees 4.50 and the special dividend of rupees 8 per share, takes the total dividend for this financial year to rupees 18.50 per share of rupee 1. As we look ahead, we believe that the outlook for FMCG markets remains positive over the medium to long term. With our strong portfolio, and superior capabilities, we believe HUL is well positioned to leverage this growth potential in the Indian FMCG market. In the near term, we are conscious of challenges, both from slowing market growth as well as the inflationary pressures on consumer budgets. However, as a business, we will remain focused on our strategy, which is to deliver growth which is competitive, profitable, consistent, and responsible.